What's going on YouTube? Welcome to another video here on the DTG indicator. And today I'm going to be showing you how you could have caught this move up. It's actually pushed for over 600, almost 700 pips yesterday during my second trading window using the DTG V5 signals. And first of all, we're going to start off with some very basic analysis, right? Now, if you guys know me and you've watched me on social media, you will know that I like inside bar candles, right? For those of you who don't know what an inside bar candle is, it's basically when a candle doesn't break the highs or the lows of the previous candle, right? And in this instance, this daily candle did not break the previous daily candle lows or highs, right? So this daily candle right here would become an inside bar candle. And the reason I'm saying daily candle is because we've got the outline boxes here, okay? Currently on the 15-minute time frame, but these boxes right here are outlining the daily time frame candles, right? And how they're closing. If they're red, they've closed bearish. If they're green, they've closed bullish. So first of all, we have straight away a bullish sentiment based on the fact that we have a bullish inside bar daily candle. And often when you get a break of a inside bar candle high or low, whether it's closed bullish or bearish, you will get quite a big move like we have saw here yesterday during kind of like the start of London session until like the end of the trading session yesterday. So first of all, that's what we have. We started off with knowing that the daily candle was an inside bar candle. We know there's potential bullish momentum in the market now. If we start breaking the highs, we know there's a lot of volume that's going to come into the market based on this inside bar daily candle, meaning that price is consolidating throughout the whole day, meaning that when we do get a push, when we do get a break during the next day or the next day, there's going to be a high volume move. The second thing we want to look at right here is the DLS, right? Now, what I like to call DLS is daily liquidity sweep, meaning that we have come down, the daily candle has closed bullish, and we have come down and we have spiked out of that previous daily low. So all bullish liquidity is lying under this level right here, okay? So once we did that during Asian session, it started to bounce. You can see it bounced right at that level right here on the 15-minute time frame, right? It bounced right at that level. The candles closed right at that previous daily low level. And we started to get a bounce from there. We saw some consolidation, and then we started to see the move to the upside. So already, right, coming into this trading day, coming into my trading windows, we've got a lot of bullish momentum, right? So already at this point, I've built my direction that I'm trying to trade. If we take a look inside the V5 course right here, and we go down to the trading plan PDF, and we have a look at the PDF right here, we can see that the first thing that we need to do, if we go to the entry checklist, is direction, okay? And for that, we have this section of the PDF right here, pre-session analysis. We're looking at sentiment check, and we're looking at momentum and structure, okay? So sentiment check right here at this point, we had daily, and we had 4-hour bullish time frames from the sentiment. This is also part of the DTG indicator. So straight away already we have bullish sentiment, we have the bullish inside bar, we have bullish liquidity sweep. So we already have a big argument for buys yesterday in the market. Second thing we need to look at, I don't know why this wants to reload, is momentum and structure, okay? So where I like to get my momentum and structure from now is from the 4-hour time frame. So if I turn on now the 4-hour candle overlays, right? So these red and green boxes that you're seeing on the chart now are 4-hour candles overlaid onto the 15-minute time frame. So I can see how these 4-hour candles are playing out, if they're closing bullish, if they're closing bearish, where the highs and lows are. And at this point, coming into the second trading window, which is when the 15-minute signal showed and gave us that beautiful entry, we had bullish market structure, bullish momentum, aligning with the previous daily bullish momentum, right? Because the previous daily candle being bullish, the fact that we grabbed bullish liquidity here, we then had 4-hour bullish closures here and 4-hour bullish closures here, breaking highs, creating a new high, lows, higher lows, higher lows, higher highs, higher lows, right? So again, more confluence being built now in the direction that we are trying to trade. Okay, so we've built sorry about this. I don't know why it keeps reloading every time. So we've got our sentiment, we've got our structure, we've got our momentum. Now we're looking to build confluence. Okay, so now we need to look at some of these things right here: key levels, fib retracement, prior days, high low swing points, candle patterns and formations, inside bar candles, and liquidity sweeps. Now, from the analysis that we've just done from the daily time frame, we already have these two confluence right here: an inside bar candle from the daily and a bullish liquidity sweep from the daily, aligning with our bullish sentiment. Now we can add a couple more if we want to: key levels, Fibonacci retracement, and inside bar, candle formation. It's not in here. That needs to be put in here though. Yeah. So at this point, we have, like I said, we have the bullish liquidity sweep, right? So we have DLS, we have inside bar. So that's two confluence built in the direction that we're trying to trade with our sentiment, which is bullish. Then we have bullish 4-hour closures, bullish momentum, bullish 4-hour market structure from these points right here: higher lows, higher lows, higher lows, higher highs. And then coming into the second trading window here, we have beautiful candle formation. Now, what I mean by candle formation is when a candle opens and closes, it needs to form correctly. And in this instance, in this example, the 4-hour candle opens right here, instantly spikes down, creates a bottom wick of 98 pips, right? That is a beautiful bottom wick. And if we draw our Fibonacci level, okay, we can see that price retraces into the 75 to 50% level. This is my key Fibonacci level right here. We can see that it retraces into that perfectly while forming that bottom wick. And if we go back using the replay tool, you can see that all the key levels right here, if I get rid of this fib level for now, you can see the key levels in the market right here, right? Provided by the DTG indicator as well. We're retesting that level. 1, 2 rejections of that key level and price starts bouncing back to the upside. So going back to the list, okay? It's going to load again for some reason. Going back to the list, building our confluence, we have a key level. We have fib retracement. We have prior days high or low swing points, right, in terms of the liquidity sweep. We have candle formation. So it is in there, my bad. So candle formation. We have an inside bar, and we have liquidity. We literally have every single confluence builder point from this PDF within this setup, okay? Now what's next to do is look for your entry using the DTG algo, DTG indicator, okay? And where does that come? That comes right here in form of a 15-minute buy signal aligning. And if we use the replay tool and we go back over here, we get that next candle up. We can see that once we get, let me turn this off. Once we get that signal, this pops up over here. So we have entry, stop loss, take profit 1, take profit 2 in the top right-hand corner in our data table. So we have literally everything we need right here to get us in a trade with a beautiful entry with literally no drawdown, as we can see, no drawdown, and it just shoots straight to take profit and ends up flying in total for almost 700 pips, I believe. It comes all the way up here. Delete these while this plays out. Comes all the way up. Just get this moving a bit quicker. Right, and there we go. Look at that entry. Absolutely beautiful entry right there. As you can see, price spikes up for 688 pips in total right there from that move. Okay. And you've got a 1 to 7 risk to reward ratio trade. Absolutely insane. And this was all done by just following the DTG Academy PDF, blueprint PDF for your trading plan, right? Your pre-session analysis, your confluence building, your entry criteria, trade management, journaling, and data tracking. And all you're doing is following this with everything that I have given within inside the V5 course with the V5 entries. Obviously, you get 3 entries. In this instance, we took the 15-minute buy signal. But if you didn't get the buy signal, you could have entered the IBO right here. Okay, this is your IBO level. This green level right here, this is your intraday breakout level. You see a 15-minute closure above your stops there. your entry, and you hit a 1-to-2 risk reward ratio right there for 432 pips. So even if you didn't catch the signal, you would have caught the IBO, right? There's multiple entries for you to take endlessly every single day, as long as you're following the trading plan and getting your sniper entries with the DTG indicator. I hope you guys enjoyed that video. I hope it was insightful. If you guys want more information about the DTG indicator, there will be a link down below for the DTG website right here, where you can go and look at reviews, results from members, exactly what you get, what you could potentially earn, the benefits, how it can transform your trading. And you can get all this for 57 USD a month. So if you want to check it out, come and check it out. I hope you guys enjoyed the video, and I'll see you in the next one.